All right, everybody, welcome to the Tuesday 10X uh, Mastermind interview. We have the one and only Andy Zemon. I don't actually know how many times I've interviewed Andy, but it's been enough that I can't remember the number. And it's been enough to know that I just get fired up. He's one of those human beings that you like him, you trust him, you respect him. He's winning his database. He's winning locally. I can assure you in the market that Andy serves, he has rocket proofed his business, like bring on Rocket Mortgage because the guy is an incredible advisor. He's done 3,627 mortgage coach total cost analysis, 1,209 videos. That means those are like thousands of families where he hasn't just helped them with a loan. He's delivered a real mortgage experience that helps them build wealth with real estate, helps them achieve financial freedom faster. Andy, what's up, brother?
What is up, Dave? Thank you so much for having me. I remember it's been at least five interviews, at least five. And you know what? I'm proud to say on those TCAs, that's since you started tracking it with the new one. Remember, I'm old school. I went back to the old computer-driven one that was logging on your desktop, and that's where it's stored. So if we go back that far, I don't know. There's probably at least another couple hundred.
Oh, probably a couple thousand because it's not, I mean, there was a time when it wasn't a digital link. It
Right.
was like,
Yeah.
oh, you could print out a piece of paper that
Yeah.
you could fax your customer. So, I mean, we go old school here. So Andy, I know you're also a coach for Go Coaching. So go,
Yeah.
Amir. If you hear this, Amir, we appreciate you. He's one of the top First Home IQ ambassadors. I think you also are involved in First Home IQ, which we appreciate.
Yeah. Yeah, that's right. In fact, we just had our GrowthCon 25, we'll call it the spring edition. We just got back from that was last week actually down in Phoenix. Some of the people here on the call, throw a shout out in the chat if you were there. It was phenomenal. I've been to some really great events, and it was fantastic. The cool part about that, Dave, and this is why I think there's so much synergy with you and Amir and the Go Coaching platform, et cetera, is it's all about modern. It's all about staying on as much as you can, that cutting edge, right? And being the forefront and being about the relationship and the advice, not about the transaction. And that, look, that in and of itself, that's the basis for that rocket proofing your business. And I know you've had Jeremy talking about it. We just saw my girl Shayla at the Go Coaching, the Growth Con. She was there as a
That's
special
right.
guest.
I saw that she was like your
So,
keynote
dude, it
speaker.
was it was it was insane. All we were missing was Dave Savage. He just wasn't there on that one. But rumor has it maybe we'll bring him in for another one. So
Yeah, hey, let Amir know. If I was ever invited to be there, I would be there. And by the way, you brought up a good point on modern. If everybody on this call has not taken the modern mortgage IQ assessment, I just put a link down below. Make sure you took it. If you have taken it and you know your score and you want to share it, share it. But when I'm talking to future mortgage coach clients, I always ask them, hey, on a scale of 1 to 5, 5 being you are rocket proof, like you have rocket proofed your business model. And I use the term rocket just because they are now like, what is it, 9.5 million mortgages under management with the acquisition of Mr. Cooper. But it's servicer proof. It's future proof. If you have not future proofed your business, you need to modern up. Ryan's got a 97%. That's really high. Make sure you take that. By the way, Anthony, or not Anthony, Andy, have you taken that assessment?
I have, yeah. I don't. It was when you came to our corporate event. If I remember correctly, it was greater than 95. I know that. I don't remember. I don't think it was 100, but it
Well,
was it was it was way up there. I'll
well,
take
I
it.
am actually going to be able to log into the back end and tell you in
Oh,
a few minutes.
oh boy, here we
But
go.
but but we're not going to hold up for that. What I want to
All right.
do is you pick this headline. Like I invited you because I wanted to hear how you were doing, and I knew the community would love to know how you're doing and how you're winning. But why did you pick this headline?
The headline is elicitation selling.
Yeah,
So so I so I'm constantly looking at other industries and how they do something similar to what we do, right? So I look at, again, maybe we've talked briefly about it before, but I looked at my wife's business as an orthodontist and her orthodontic practice, and how does she manage her calendar? This was like 6 years ago. I'm like, you do it so much more efficiently than I do. Why can't I do that? And it's not because she has some special designation behind her name. Just that their industry is that much more organized. They're that much more structured. And so I started, deep diving into those things. And okay, great. How do these other places, schedule and just all of this junk? Well, I really was looking for a revolutionary way to sell without selling, because the reality is no one in this marketplace more than ever wants to be sold anything. And so the same pitches that the mortgage industry has been using for the last 20 years, would you like to go for coffee? And as I'm talking to some of my students, they're telling me, they're like, well, how do I get this realtor to agree to go out for coffee with me, in the middle of the transaction? And I said, you don't, because you haven't earned it. You just close your transaction, you close the deal, you do a great job, you give them value, and you'll figure out quickly whether or not there's a synergy. And I thought, okay, well, great. Then when we do get that appointment, because there is synergy, how do we keep that momentum going without creating an environment where we're then, well, hey, let me tell you about us. I've got great rates, and I've got great service, and okay, blah, yes, you do. Otherwise, right? We've all said it. Every guest that you've had here has said, otherwise you're out of this business. By the way, if he's watching today, special happy birthday to our buddy Todd Bookspan, right? So I know he's always on these calls. I just thought about that. I messaged him earlier today. It was his birthday. So sorry. But so elicitation selling. Go ahead. You want to say something?
No. Well, I
Okay.
was going to say, everybody, right now, you can multitask. If you have Todd's mobile number, wish him a happy birthday. And if you don't have it, I'll put it in chat. Let's see how many people let's just blow up his
I
phone
love it.
with a
I
big
love it.
happy birthday. So stay tuned for his number in chat.
I love it. All right. So elicitation selling. So I'm going through doing my daily, just kind of like DMs, Facebook, social, whatever. And up pops this feed, and it's this guy talking about a CIA interrogation tactic called elicitation. And I was like, oh, this is kind of intriguing. Let me watch this. And, it was a short little video. And I was like enthralled by the idea, Dave, that you could get somebody ethically, you could get somebody to sell you to themselves in the same manner that the CIA uses to interrogate and extract information from people without them thinking that they're giving information. And it comes from statements instead of questions because of the mind shift. So then I started doing this deep dive down this rabbit hole. And what I found is there's an entire methodology to this sales practice that, when done ethically, is something the mortgage industry has only touched the tip of the iceberg on, which means these are tactics that the clients and the real estate agents and the builders and the financial planners and these people that we're prospecting to that have never experienced before. So doing it ethically, doing it correctly, we can use these in our day-to-day business to win further instead of using the old approaches. So that's where it all came from. That's why I threw it out there. It's because it's top of mind for me. I'm using it. I'm working on it. I'm developing some strategies. So I thought we'd share it because you probably haven't heard anything about it so far.
No, this is new. I did put the word into Perplexity. So whatever AI tool that you use, like, this is how we learn nowadays, guys. Put the word in, and then start asking questions like, hey, how does the FBI or CIA use this? And how could this be used as a mortgage professional? So guys, follow along, use the AI feature of your preference, and enlighten us, brother. I want to hear how
Yeah.
the best mortgage coaches in the country is using this new philosophy.
So I'll tell you what, I'm going to give this to you as well, Dave, before we get started on the back end. This is you guys can share this as you want or as you need to. This is a presentation that I put together on it. So I took a
Oh,
lot of
dude,
time.
you are too cool.
Yeah. So you guys can go have some fun with this. And so basically, when we talk about elicitation is we'll call it the ethical manner of extracting information from people without them feeling like they're giving you data and information. Okay. So an example of that might be if I'm talking to Dave, and let's say Dave's a realtor. This is subtle, by the way, and the principle is built on psychology, it's built on trust, it's built on conversation, not pressure. Now, we come from a school, right? If you've been in this mortgage industry for a long time, we all come from the school of like, maybe you should create a false sense of urgency. Rates could go up tomorrow. Yeah, but they could also go down, and they could also be exactly the same. And if there's anything we know about the current market, nobody really knows which direction they're headed. So let's just have a conversation with somebody. So it might be a conversation if I'm talking to a client that says, "Ooh, yeah, you know what? I bet you you're probably in a place where you're pretty intimidated right now based on the general market movement that you've seen or expressed. Like, I don't know how you feel about that, but we're finding a lot of our clients feel intimidated by that." Now we stop. There's no question there. So Dave, when I ask you a question, your mind immediately goes into what mode? When I ask you a question and I say, Dave, are you thinking you should rate lock or should you float? Because that's kind of the same thing I just said, right? But I asked you a question, and even if you just think back right now to like, how did I feel when he asked me a question? What intrinsically do you feel like when I ask you a question?
Um,
I
I
mean,
matter. I matter.
you matter,
What
yeah.
I think matters.
But instinctively, right? If you have kids, when my child comes in and says to me, Dad, can I? I'm automatically programmed to respond in what tone? The negative or the positive? The negative. My kids say, Dad, can I? Before they even ask me what they're going to ask me, I'm like, no. Like, why did I say that? It's because I just want to stop whatever it is. That it's a process. It's a sale. It's a whatever. But when I ask you a question, right, or excuse me, when I ask you the question, your mind instinctively goes to defensive. Like, Dave, would you rather lock at this point, or do you feel comfortable locking? That sounds like a commitment. You're programmed to say no. Okay. Whereas if I say to you, look, there's a lot of people right now in the marketplace that are really terrified about the movement within the marketplace, right? I don't know how you're feeling, but I'm curious, right? Like, could you understand why they feel this way?
Mm.
Right now, what happens is I get information from you. I don't get yes or no. I get information. Okay. A real estate agent that we're talking to, we're having a conversation with, and it might be something as simple as, okay, literally, I did this the other day I was on a call with a loan officer, and this was my first attempt about 3 weeks ago with Elicitation. And I said to this loan officer who works at a credit union, and does really good business at a credit union, self-sourced. And I said, hey, this is phenomenal. I've never seen business done organically, self-sourced like you do at a credit union, like at your volume level. Your credit union must have the most phenomenal systems on the planet. What do you think her response was? She said, no, actually, they suck. They're terrible. And so I said, well, tell me more about that. Like, how is that possible? How are you doing all of this business if their systems are that bad? And her response was, well, I just work a lot of hours. Now, if I'd have started the conversation, and mind you, we'd never met, but if I had started the conversation with a question that said, wow, how is your credit union? They must, like you guys must have great systems and support. Like you did a great job, but like, how do they do operationally for you? She probably would have had a much softer approach. And then like, oh yeah, they're fine, right? Because you don't want to give away too much information. But when I make an emphatic statement that says they must absolutely be killing it, immediately she wants to be argumentative with that fact because she knows it's not true. So I'm bringing out the natural argumentative or we'll call it disruptive, right, patterns in order to get the truth. So these are some of the processes that you can use. But this little workbook that I'm giving you guys, it's going to walk you through multiple different stages. And so, Dave, there's core techniques where basically these are the top six that work. There's what's called a presumptive statement. Okay.
By the way, are you talking and speaking to things that are in the slides?
Yeah, you'll see them in the slides. Yeah.
Because, well, by the way, because the way I look at it, you're giving us a little micro class right now. If you want to show slides while you do it.
Yeah. Oh, you're okay with that? All right, cool.
Yeah.
Okay.
Because I just take that way as you're giving us a lesson on all of this, whatever. Now, by the way, when you're talking about things that aren't in the slides, take them down.
Yeah.
But I just think it will be a better, more effective teaching.
Sounds good. So the core techniques that you would use and you would work to implement. And by the way, these things are going to take practice for you to use, but you've got a presumptive statement, something like, I bet you, right? I bet you spend 40, 50 hours a week just writing loan fee worksheets because it takes a ton of time, doesn't it? Well, and they're like, well, no, not quite that much, but 30 hours. And you know, and then it's like, okay, well, by the way, if you used a TCA, it'd be a little faster, right? Okay. But anyway, I bet you. So now we're extracting information, right? Flattery. Let them brag. We all done this. Everybody loves to talk about themselves. Oh, are you not seeing the slides?
He shared them. I'll make sure they're shared again.
Oh,
So,
yeah, yeah. You're talking about the actual link. Okay. I gave them to you guys, not to the panel. So that's,
everybody, stay tuned. We're getting the link to you.
yeah.
And you now have Andy's.
I can post it. You want me to just hit
No,
enter?
I just did it. I just did
Okay.
it.
All right,
Everyone, you got
cool.
them. Look in chat. And by the way, everybody, there's a link to take the assessment, and there's also a link to get a 10-day free trial of Mortgage IQ. We'll talk more about that later.
Right.
Amir is one of the guides and coaches in there. I got to talk to Andy offline here, get him involved. I think he already is involved, but we got
Yeah.
a guided experience from you.
We'll do a little more, right? So, okay, so we got oblique references. Now, the first two are really simple, right? Oblique references is when you're using examples to trigger stories like, oh, well, then there's this one time where, you know, I saved a deal because you know, there was another lender that was, you know, that was really closing late or, you know, whatever. And then you could close with a statement that says, but I bet, you know, you're such a professional. I bet that never happens to you. Okay, well, no, it does. And my oblique reference just told a story that I want them to comment on. The whole point is using these open-ended statements to create dialogue. Feigned ignorance, right? I'm not sure how that works. Like, I don't know how it's possible, Dave, that you did, you know, 3,627 TCAs in your career. Well, that's feigned ignorance, right? I do, like you do one for every client, right? And this is my world. I do one for every client that I'm talking to. And I would probably share with you why, because it doesn't seem to me that an individual should not understand how that happens. Okay. Bracketing. We use this one quite a bit, which is, are you thinking about more like a 5 to 10% down payment, or is 15% more in your line of thought? So we're creating options, right? Do you want Tuesday at 2 p.m. or is Wednesday at 3 or Wednesday at 9 a.m. better for you? These are bracketed responses where we're guiding them in order to give us feedback instead of open-ended questions like, well, what time would you like to talk? What time would you like to meet? Okay, so you always want to go in when setting an appointment with a bracketed dialogue. And some of these things you probably didn't know you're already using. These are tactics to some extent that we've learned. We just never were able to I was never able to put a name on them, right? I just called them open-ended questions, I guess. Word repetition, okay? Pre-inspections in this particular case. So we want to talk about repetitive words in a process, pre this, pre that, pre-interview your client, pre-listing meeting, right? The pre-partnership meeting. That might be something that we go on with a real estate agent. Well, why would we go into a pre-partnership meeting? So they understand that this is before there's any type of partnership, but they also understand that on the back end of this is the potential that we're looking for a partnership. Okay. And so there's a lot more that you can, and in fact, if you start asking AI and you're like, hey, by the way, tell me more about how I would use a word repetition in an elicitation sales tactic, it'll give you a detailed drill down. There is also about a 12-page book that I've had put together on some of these combined resources. Funny enough, Dave, check this out. If you were to go online and you were to Google elicitation techniques, one of the documents that comes up is actually the FBI's training PDF on this. And so what I did was I took that and I put that in a notebook LM along with a bunch of other resources. And I said, summarize this to give me the high points of how I would use this in my mortgage career. So partner application examples. And you'll see in this, what we've done is we've gone through builders. We've gone through some realtors. That would be agents. We've gone through builders. I've given you guys some information around CPAs and CFPs. Okay. Builders and real estate agents, somewhat similar, although builders are obviously very, very concerned about construction delays. But this is the most underestimated market right now. And this plays so well into people that use the Trust Engine and the MortgageCoach products and communities because we're in alignment with these individuals. What's really intriguing, though, is this. In my experience, I've found CPAs and CFPs struggle to work with mortgage people or anyone else in that matter because they fear loss. They fear loss of control. So it's a very different model. When you go in selling to a CFP and a CPA, like you do a real estate agent, you will lose. You will not get anywhere near what it is that you should get. And they work very different than builders as well. So what we're looking for here is we're looking for, one of my CPA partners mentioned their clients often make mortgage decisions without consulting them first. Have you ever run into that issue? Now, this is kind of a statement, but it's at the same time, it's a question. Why? This is eliciting their fear of loss of control. So emotionally, it brings to the forefront for them the reality that this has happened, and they know it's happened, and they don't feel good about it because, Dave, do you think they think their clients make good decisions or bad decisions without them?
Bad decisions without
Bad
them.
decisions. So if they really care about their clients, this is a problem. We expose that weakness and we get the opportunity to step into the opportunity. There, Jeremy Forcier. Oh, man. I don't think I've ever been on a call where he's actually been an attendee. Man, I'm like, I feel like
Dude,
I'm on my way.
Star power, man. J-Force.
Wow,
You
that's
are a
cool.
rock star. Maybe we ought to have him join us backstage here at some point.
That's awesome. So listen, creating value propositions with these CP, and the reason I'm focused on this, guys, is because look, real estate agents are critical. They're important. There's no doubt about it. Builders are critical. They're important. But listen, this is the opportunity. This is where the money is right now. Financial planners want to keep it. They want to hold it. CPAs need to help their clients with their tax bills. Everybody's scared, and these people are professionals that people look to for advice, and they do not understand our business. They cannot properly advise their clients without our help. So I imagine your clients sometimes ask you about mortgage options. What resources do you use or have to help them better? Well, I've got experience because I bought 3 houses. Well, what if we could give them some resources? What if you just simply said, let me show you what we do, and I would love your take on this. Do you mind if I show you a total cost analysis that I pulled together for clients that are refinancing their houses or that want to refinance their houses? Because let me show you how I do this. Now, guys, I am going to pull up this TCA and transition for a second because you can watch this. There's a past training that I did right as we were coming out of COVID. Dave, I did do a training with you that talked about my 3 golden rules of a refinance and how we sell these. Watch that training. The reality is I have a greater than 95% retention rate with my clients, and I do preemptive refinance calls with every client. We create trigger rates. We create strike rates, whatever you want to call them. We log that into Optimal Blue. When that rate hits, we refinance. We make sure they understand trigger leads and they get on the opt-out pre-screen list, and we do all of those pieces. And here's what we do. We tell the financial advisors and the CPAs that their common understanding that this is about a 1% interest rate decrease is wrong. It's bad advice. Why? Because first of all, they need to save at least 10% of their current principal and interest payments. Your TCA will show you mortgage insurance, principal and interest. 10% of this number is a little over $2,500 a month. If I've got my client saving a little over, $250. If I got my client saving a little more than $250 a month and they keep their payment level and apply some extra money back towards principal, right? We're going to illustrate the payoff time period. Oh, somebody went in and changed my test on me, but I'll go in and alter this. Basically, here's the metrics, and watch Dave's other training on this. Save 10% of current principal and interest, and then show and demonstrate this payment being added to the savings being added to the new payment. And if their mortgage is debt-free 3 years faster than they're currently on track for, then there's no reason to not refinance. So now we make that quick change. Show you how easy Mortgage Coach is to do that with. Look at this. Payment matches, currently paid off in 27.83. For the same payment, they're paid off in 22.92. Their break-even point is relatively low. We always have clients bring their payment and their skipped payment and their escrows to the closing table. And the end result is a mortgage that we can do over and over. I refer to this as the reverse dollar cost averaging. They're familiar with dollar cost averaging. This is laddering down your interest rate. Every time there's movement that creates these variables, savings of 10%, savings of another 3 years, We refinance the client, and we do it before the servicer can get to them. And the servicer is only talking about one of these three variables. Talking about rate, they're talking about cost, or they're talking about time. We're talking about payment savings and time savings, which is the most critical. Once we finish that, we go back to our elicitation selling technique and we say, if I could show your clients a foolproof way that they could refinance over and over again and never actually lose opportunity or money, would that be worth seeing? The answer is yes. We show them this report, and I just picked up a new business partner. That's elicitation selling, all because we opened this door.
So by the way, guys, the hearts are coming in. The fire is here. The smoke is here. If you guys are getting value, let us know. Uh, Anyways, this is pure gold, bro. We need to get a version of this, a little 10-minute micro lesson from you in modern mortgage IQ platform. Are you game with
Yeah.
creating just a little like something that we could teach at
Yeah.
scale?
Yeah.
Now I want to stop sharing the screen real quick. And first of all, community, like if you want Andy to do take a script that you have and then give coaching to that, put it in chat. Like, what are all the different scripts or strategies that you'd like some coaching on? But I want to get his coaching, and since Jeremy is here, we're going to do a little Jeremy Forcier script, and you're going to coach Jeremy. And I'm telling you, he's going to love it because I know my man Jeremy. So this is a clip from a couple weeks ago. Actually, there's a version of this in the Modern IQ platform, and I think he was doing the month we did this last month. He was on track to do 8 million, and the month before he did 8 million, and 4 million of that was first-time sellers. So he has a whole script and a strategy around how he calls first-time sellers. So let's listen to it. Take some notes, coach, and then you're gonna give Jeremy like, hey, this is the Andy Zemon version of this. So take notes, guys.
You need to know what they purchased the house for, okay? And you need to know what it's worth now in the minimum, your CMA, your current market analysis. If you want to go real pro, you know what they bought it for, what the value is, and what their down payment was, okay? So there are two different scenarios. The one with the know what their down payment is, that would be like a past customer and have them call you, the lender who did the loan, or get that information from the lender that did the loan. Okay, so here's what the script sounds like. It's like, hey, Dave, it's Jeremy Forcier with a CMA real estate company. How are you? How have you been, etc. Listen, I was doing a review of people that have like done really, really well on their home purchase, and you were one of them. So when I look at it, you bought this house for $500,000, 5 years ago, and it's currently worth $750,000. That's a 50% return, like on your investment over time. You've made $250,000 like in equity. And when I look at like what you put down as far as a down payment, it says that you only put down $100,000 on this, and it's gone up 2.5 times. So you have literally made 2.5 times on that investment just over a 5-year period. Like, I'm so happy that we could have helped you with that. Hey, let me ask you this. Are you interested in creating more wealth with a bigger asset? Like, if you bought a house that was worth a little bit more, you could just do this again and keep creating more wealth faster. Is that interesting to you?
So first of all, for me, I'm not well trained at illicit selling yet, but it sounded a lot like illicit selling. What are your thoughts?
Well, I mean, he's Jeremy, so it's gold, right? Like talk about an awkward place to try to take a 10 and make it an 11, right? With somebody that you seriously respect in the business. The only thing I would say is this, and Jeremy, I love this dude, but like when I make these calls, a lot of times I'll start with a general statement that says, I'm noticing a lot of my pre-approved buyers are in your price range and in your area. And a lot of what we've seen recently has presented some significant profit. I'm happy to put this together, but at first glance, it looks like you're somewhere in the neighborhood of about 50% gain or 150% ROI. So I start with more of a statement just so that if I don't ask the question, they don't say no. And then that opens up the door to more along the way. So, and again, an example might be, hey, there's a lot of buyers that I have that are pre-approved in your price range and in your market. And I'm just curious, since we helped you with that, would you like information about what your house realistically ROI has been over the last 4 years? And there's still a question there, but it's not really asking them for anything. And then I have the data, so I'll share it with them. And a lot of times I'll actually schedule that as a follow-up call. So like I do this with my interest rates is, well, great. Well, it's going to take me a day to pull together some of this data. Why don't I schedule a 15 to 20 minute call with you? And then I'll walk you through what we find. That's where an agent can do the CMA. We can do the CMA and then ultimately close the door around that. And I think what you were alluding to here, Jeremy, is it doesn't have to mean selling that house. It could realistically mean, it could realistically mean that they could be just simply looking at leveling up and leveraging equity in order to buy a second home, right? It doesn't even have to be a new primary. Yeah. So yeah, no, I don't want Jeremy to interview me. I'm terrified now. So yeah, general statement, fact, curious question. So like you said there, thank you for summarizing that and not don't let them live. I don't need to beat me up too badly.
No, come on, man. Come on. Like if well, first of all, Jeremy could be in his car driving on his way to a realtor meeting. If he does want to raise his hand and join us, we'll bring him on stage. Jasmine, what is up, Jasmine? It's been a long time since I've interviewed you. I hope you're killing it in your market. By the way, Jeremy said, great job. So thank you, coach. What about Jasmine's script here?
So after reviewing your estimates and other options we've decided to go a different direction in our lending. That's a really good one. Okay. So I actually in my, let me show you, I think I've got that one.
And also, okay, I would love, before we run out of time, any move up, where someone did a move up. I would love to see that at some point before we run out of time.
So mine would be a reply question. And I would say, hey, I genuinely appreciate the respect that you have for me and my business, Jasmine, and your willingness to come and let me know. I wouldn't be properly doing my job if I didn't ask just a couple small follow-up questions purely because I care. So let me ask, was this service related in this particular case? I have to assume. I'd love to know where I let you down. Now, the reason I immediately go to service and I apologize for letting you down is because I'm making the assumption that it can't possibly be rates and terms. What is it always? It's always rates and terms, right? It's not service. So it gives me an opportunity to have them reinforce what I'm better at. No, Andy, your service has been phenomenal. Like, actually, your service is better than any mortgage experience we've ever had. Now I get to circle around for a close. Well, then that just tells me that it must be something to do with rates and terms. So there he is. So what I'd love to know is, Dave, if you've really appreciated my service to this point and it's been epic and it's been the best you've ever experienced, if I could just match the rate and terms, would you be willing to let me see this through to closing so I guarantee you the experience you deserve? But first, we have to get them to unsell the competition by admitting that our service is better. So then we can close the gap on the rates and terms. That's fine. If they agree, if I'm the best ever, cool. Then I want to be the best ever and I want to make this work. What if I can match those rate and terms? Now they're stuck. They're like, well, you're right. For the same rate and terms, I'd rather have shitty service. No, for the same rate and term, I'd rather have your service, Andy. Of course they would. And I don't make them ask for it. Them asking for that price concession, it doesn't work. So if Jeremy were my client and he's like, well, this other lender basically said they'll do my loan for a 0.5% lower rate, I immediately say this, Jeremy, I really appreciate that. I want you to know, I want your business. I'm not able to make that match. So let me ask you, you came back to me because I feel like we've got a good working relationship. Do you agree?
Yes.
Okay. So what I'm curious about is this. If I can deliver you everything that we've promised plus one throughout this experience, what do you think that service and commitment and guarantee and expertise, what do you feel like it's worth to you? And if I can do that for you, I'm going to do it. I can't do that same offer, mind you. I already said that. But what is my service and expertise and commitment worth to you? Now I make you give me a value. And when you give me a value, it's never what their offer was. It's like, well, man, if you could just like cut some lender fees or like, I don't know, I guess if you could get within 0.25%, because you guys do have that free refi program, blah, blah, blah. Like, yeah, I really like you. I want to do this. I'm like, okay, great. I will do that for you. In fact, in one other step, I never do just that. I always do that plus a little more. like, Jeremy, I really like you. That 0.25% in rate, I will do for you. But I'll tell you what, I'm also going to go ahead and waive my processing fee. It's about $595, genuinely, because you did not have to come back to me and you did. And I want to honor our relationship. So does that sound fair?
Yes.
Cool. And I didn't match their rate. Sometimes it works, sometimes it doesn't. But I don't ever have to give up the entire price negotiation where I'm not making any money anyway. I might as well know, are you going to stick with me or not stick with me? And if you're going to stick with me, I'll make a little more, but you already said I'm better.
I love this. So Dave, thanks for bringing me on. I was sitting here just like freaking gold, Andy. Like, it was so good, man. I mean, those notes I was putting was like, that's what I'm learning, like, live. So thank you for that. Really, really great. And a big takeaway I just want to highlight for everyone that's listening, because we're all a bunch of babies, okay? At the end of the day, we're just a bunch of little whiny babies, okay? And that is true. I'm putting myself in the same boat, right? Is that he didn't say that it's guaranteed that you're going to get every client that is going to shop you in that way, but you will win more than you will lose. And I think that's the big takeaway here of listening to these scripts. He's obviously practiced. He is a professional. He has them dialed in. His scripting in this manner is way better than my scripting. It's super dialed. It's measured. He knows what he's asking for. He's anticipating the response that he's going to get. And then he can deliver and have a higher chance of converting people that he might lose. So Andy, a question for you. In your experience, do you think that you get shopped like what, one out of 4 times you're in a situation like this? Like, what does it look like?
Yeah, 20, 25% of the time.
Okay.
It's about right.
Yeah, I think that's correct. So I think that's true across all the best salespeople. So I want you guys to remember this. Across the best salespeople, we still have a chance of losing deals like that we already think we have 25% of the time, 1 out of 4 times. That's like the best people, right? So think about your skill level. Where can you get better? You're listening to Andy just drop straight gold nuggets that you can cash into a bank anytime you want. And can you move from like, is this happening to me 50% of the time to 60, to 65, to 70, to 75%? Now you're winning in increments that make a really big difference. You're already winning 3 out of 4. Now you're winning like 1 out of 4 of that 25% that you were going to lose anyway. And that's really what moves the needle. And I just appreciate your transparency and sharing that stuff.
No, thank you. I mean, it is frustrating, right? Nobody likes to lose these deals. But listen, and I think you're the same way, and Dave, I believe you are as well. But I come from a world where I believe that everything that happens is my fault.
Yes.
So, and because I take that approach to it, nobody ever does anything to me. Nobody ever shops me. I just didn't create enough value to have not gotten shopped to begin with. And so when I take that approach, I can always finish by course correcting, because I'm not a victim in that environment, right? A victim of myself, basically. And so by taking that approach, it helps me sleep at night, right? I don't lose as much sleep over it. And don't get me wrong, we all hate losing deals, but you just go back and you're like, I got to get better. I got to get tighter. And what I learned in reading some of these books, and of course, like Chris Voss, Never Split the Difference, like these different tactics, is people at the end of the day they don't like conflict. They don't. And so if I can make conflict not feel like conflict, but it still creates that inner like uncomfortableness, I'm probably going to win more than I lose. But if I do it professionally, ethically, politely, we're creating that environment where people have a tendency to go, I don't really feel like fighting today. And so this is what we're going to do. Keep in mind, the loan officer on the other side is just promising a slightly lower rate. So I know this, the second I match that, they're going to go back and they're going to tell the other lender, hey, he matched it, we're going to go with him. He's like, okay, well, what if I just beat him by another 8? Like, okay, I don't want to race to the bottom. So let me draw the line here, let you agree to pay me more than you thought you were going to pay the other guy, but agree that you've established that price differential is relative to my value that the other lender can't match. And then there's no more competition.
I love it. Here's why I love it. It's a bold statement. So big takeaway for everyone. Making bold statements that aren't aggressive in nature. making bold statements that aren't aggressive in nature, right? We mess this up a lot of the times because when we make a bold statement, it's like our adrenaline gets going and we're nervous about it. And then we just like hammer people like in the wrong way. Really,
Right.
he's calmly just stating the obvious and he's seeking agreement. Seeking agreement is very different than pounding someone over the head with like an interest rate club, right?
Right.
So if I could give you, can I share a little script with you, like to
I love it.
tag on to the end of what you said, right? So when I'm in these situations as well, Andy, I will say something. I'll already seek the agreement, like you said. I don't do it nearly as eloquent as you. I'm going to work on this. I do, though, will say, like, I'll plant the seed. I'll call it the red flag seed. Okay, that's what the script is. So we already agree that they want to work with me. And if I can get closer, right, they're going to work with me. We're the best service, etc. And I'll always throw this on the end. I go, just so you know, when you reach out to the other lender, they're going to promise you all kinds of stuff like offer you rate even lower now, etc. That's a red flag because they would have already offered it to you, etc. So all they're going to do is say that they can do something that they can't do. And it's going to be so can we just agree to look out for that red flag? Like if they do that, and if that's the first thing that they say, like your alarm should go up. Okay.
Right. Yep. Yep. I love it. And that's, that's so Fabi has a comment in here as well. And maybe you'll help me with this one too. So what if the response is, well, why didn't you offer me that better rate to begin with?
Yeah, but, well, because that's below what my actual value is of what we charge. So
Yeah.
I'm willing to do a one-off for you because I want to keep this relationship long-term. Your relationship long-term is more important to me than just like doing a transaction once. So
Right.
it really matters what's most important to you. Having like a long-term relationship with me, I'm going to discount this for you, and I'm acknowledging that. So, but it is definitely outside of what my normal operating procedures are.
Right. No, that's fantastic. And you know what? I really like, so Fabi, to that point, and to tag on to Jeremy here is I love using analogies that people understand. So for example, let's just simply say it was a doctor, right? It was like, well, why didn't you offer me that rate to begin with? Or why didn't you offer me that price to begin with? I would say, well, think of it this way. So when I show up at the emergency room and you take my insurance information and your organization bills me whatever, $10,000 for my emergency room. And then I tell you that, hey, I don't need to use insurance. What if I just paid cash? And you offer it to me for $7,000. Like it's the same general principle. Your price was the price until it wasn't any longer. Just like you're negotiating in this case with a new employer, and you might walk in the door and the salary is listed at $100,000 a year, and you tell them that your salary requirement is 110, and they offer you, or excuse me, 120, and they offer you 110. Well, sometimes this happens and we don't set those rates, right? They come out at a bank level, but I want your business. So I'm more than happy to do it. I just want you to understand there's more at play here than just simply a rate that's, that's got a price tag associated with it. And usually when you can put it in context of what they do for a living or everybody's been employed, they understand. And they're like, or they don't understand, in which case they don't ask any more questions because they're going to feel silly asking a follow-up question to that.
So,
Excellent.
so guys, I want to insert a couple things because this is almost a rate shopper masterclass. There's a couple jiu-jitsu moves, sales jiu-jitsu moves that I want to make sure come out of this. And one of those, because I've trained a lot of loan officers on how to win with rate shoppers, is to get it off of rate and get it on the total cost. So like with a mortgage coach, you could put the competitor, quote in there. And what would that be? What's the total cost over a year or 2 years? Because everybody who's getting a loan right now is expecting to refinance out of that loan within a year, no more than 2 years. So get it, folks. If you are going to get into get into dollars, not rates. So, it's $2,000, $2,400 over the next 2 years. So one, I want to get comments on that. And then two, Jeremy, I've interviewed you enough on this. And you have another part of your script around, forward me the total cost analysis. So if you could, let's get those two moves on the table and then let's finish this masterclass.
Sure.
And
So yeah, real simply, the move that Dave just said is it just sounds exactly like this, you guys. Whenever someone's like, hey, I'm getting an offer. Like, I'll give you a real example, actually. So we had a client that I got a trigger alert, right? Like through technology, right? That said, hey, this person just ran a credit report with another mortgage company, past client. And so I reached out to them, of course. I was like, hey, we monitor your credit, like to make sure that no fraudulent activity happens, et cetera. And it looks like there could be a fraud, like someone actually trying to run your credit, et cetera. Boom, got the appointment. They said, no, it's not a fraud alert. We actually got a 5.9% interest rate quote. Well, who's it from? It's some cash call thing, online thing. Now, 5.9%, no points. Not possible, by the way. Okay. So like, I was like, oh, that's awesome. Would you mind sending me over the video and the total cost analysis? I'm sure they sent you one, like the ones I create for you. And they were like, well, no, actually, we don't have any of that. And I was like, oh, well, do you have like disclosures you can forward me in the least? We don't have those either, but can you ask for them? So I'm telling them, this went on for a week and a half. We still don't have it. They said that they have to mail it to us. I'm like, they have to mail it to you? Like, what is going on? Like, so it goes on and on and on and on. Turns out loans not locked, under other fees, not under origination. They said it was no points. Under other fees, it was $14,000 under other fees, right? So you have to ask the questions. You have to ask I love the script though, of, hey, can you forward me the video and the total cost analysis, like what I send you? That way I can look it over and just make sure that it's correct. If you can get 5.99%, that means they made a huge mistake and you should take advantage of it. That's what I always tell them. But get the information, make it easy rather than argue and say, that's not possible, which you already know it's not. Rather than argue with them about that, just be helpful. I'd love to take a look at the video they sent you and didn't send it. I'd love to take a look at the disclosure they sent you. Let me look it over and make sure it's correct. Because if it's not, I'd love to help you. If it is, you should totally take advantage of the situation. We were able to get all the information, get them off the hook with the other lender, cancel it. We're not even refining them. We told them, just wait. Like it doesn't make sense right now. So that's just a great example of how you can use MortgageCoach total cost analysis, making sure that you're asking for something that 99% of other people aren't providing.
Well, Dave, if I can add to that real quick, this is where this elicitation technique comes in as well, because as you're talking to your real estate agents and your financial planners, either you feign ignorance or the I bet response, right? Which is, well, I bet you see these all the time that come through other lenders that are showing you the decisions that your clients are making or are faced with. Like, but I'm sure you see these all the time. And they never see them all the time. You're feigning ignorance. You're like, of course, everybody must do this professionally because that's the way this is supposed to be done. Well, no, they don't. I've never seen this before. Now, what? How is it possible you did 50 million of real estate last year and you never saw one total cost analysis? Or how is it possible that you have $2 billion under financial management and you've never seen a total cost analysis before? That bold statement, again, like Jeremy said, bold, not argumentative, not aggressive, but that bold statement establishes your position as the expert, and it really creates an opportunity for that open dialogue, which is then how you step in. So that bringing it all back, not just on this rate conversation, that's how you use this elicitation technique in those professions in order to close.
Guys, so much gold. Jeremy had to get to another meeting, but guys, give us a reaction. How has this call been so far? We are in the fourth quarter. I want to make sure we close strong. So one, I want to make sure everyone is familiar. If you have not already got your assessment at Modern Mortgage IQ, make sure you do. This is a new community of some of the best coaches in the country. Jeremy's in it. Amir is in it. All the content from the Modern Real Estate Summit is here. So you could literally, at your next Realtor Mastermind, you could have a 15-minute clip from one of the #1 buyer agent in the country. You just click on this. You can even download these videos so you can make it yours. You can interact with these with AI. So every speaker, Jeremy has been a speaker at this event every year. It's actually got AI built into it. Thank you to Hoosie. Like you could go into one of these and go, oh, what was the main topic? It tells you, oh, could you create a checklist to enhance my presentation? Oh, boom. What are examples of high leverage activities? By the way, this is one of Sean Herrera's presentations that it's interacting with. So make sure if you are already not part of the Modern Mortgage IQ platform, I put a link to get a 10-day free trial. Make sure you take the assessment. Andy, before I do my closing questions, if anybody, like, what's the best place to follow you? If someone
that's
wanted
great.
to, learn how to coach with you, like, what's the best way to connect with you after this call?
Yeah, no, that's awesome. So super proud of the fact that that I'm coaching with Amir Syed and the group over at Go. We're always doing free masterclasses that are so worth checking out. So an easy way to do that, just hop onto Instagram. You can follow me at Andy Zemon, or on Facebook, again, Andy Zemon, and just send me a DM in one of those. I'm happy to get you a course schedule for some upcoming masterclasses. Those are all free. The thing that Dave and his community does, and that I think there's so much synergy with that Go community and the modern mortgage, et cetera, is it's all about giving, right? And yes, there are things that ultimately you can eventually pay for, but as you're just simply trying to level up and you're trying to get wins, right? To get some of that revenue to then be able to invest in yourself. Don't be scared to reach out. All of us, Jeremy and me, we've all been where we've needed those little wins in order to get to the point that then we could ask for the bigger help. Let's help you stay in business. I mean, we just read a crazy statistic. Another 30,000 mortgage loan officers in the next year may not be in business any longer. Don't let that be you guys because you've been too shy to ask for help. You're already here on the call. Reach out. Let us know how we can assist. That's what we're here to do. It helps us improve as we go, but we're here because somebody helped us. So let us do the same for you.
Yeah. And I believe big time in coaching. I believe that top producers, have coaches, should have a coach. The Modern Mortgage IQ platform is only $150 a month, but if you are a Go Coach client, it's 50% off. And a lot of the proceeds go to First Home IQ, the nonprofit. So check that out. When you sign up, if you are getting coached, just let us know, and Kristen Messerly will adjust your price. Again, you have to be actively getting coached from one of the top coaching organizations that are in the industry, which all of them are using, Modern Mortgage IQ, and most of them are participating in that platform. All right, so we got 7 minutes left to play this game. Let's close the fourth quarter strong. That script that Jeremy did with first time sellers, where you're really helping someone move up. Can you think of a total cost analysis you've done and just kind of show how you're helping the realtor? Like Patty Newby, who I interviewed, has one where it's like, hey, here's 4%. You're moving up into 6%, but look what that's going to do for your net worth. She's actually having listing agents ask her to create a mortgage coach for their listing presentations. Do you have anything like that would help a realtor get a listing and do a move up buyer?
I do. I'll see if I can pull it up here, but I'll walk you through it. In fact, we created it, Dave, before your event at our corporate retreat. And what we did was, you got to remember, guys, as I try to look for this. If not, I'll give it to you, Dave. You can maybe post it in the after follow-up.
Yeah, by the way, both his refi TCA and we will get a move up TCA will be in the show notes of this call. We are using housing.link, where the one, there'll be a video, and two, any of the links that were mentioned in this call will be in that link. So thank you, Scott Nicholson, for donating a license of that to the Mortgage Coach YouTube channel. So for anybody on this call that is a coach, that is a manager, that's helping other people, like, think of that as just like a sales meeting in a box. Same thing with all the videos in Modern Mortgage IQ. We're trying to make that a platform for coaches, whether you're a professional coach or you're a branch manager and you're coaching your loan officers. We want to help coaches be more effective coaches. All right.
So Dave, I'll give you this link. I'll pull this up real quick and show you guys. But basically, you got to remember, it's not just about the mortgage. Most Americans, when I say most, they're carrying record amount of debt, and the mortgage they're emotionally attached to because it's a 3.25% mortgage, not a 7% mortgage. But what we did here was we moved a buyer who bought their original home at 390 at 3.25. and currently has about a $236,000 payoff, but they have a ton of other debts, right? So they're carrying non-mortgage related debt of about $1,500. I just took some general statistics and, and that's what we built this around. But there's a number of ways to illustrate this. I just did it quickly and put it in as the debts, obviously non-mortgage related. And so then what we did was we assumed that they sell their home, they take their proceeds, they pay off their non-preferred debt. They go buy a $550,000 home with some down payment, okay, about 10% in that particular case. Rest of the money cleared the debts, and they've got a total payment of $3,917 on a monthly basis. That's considerably more than the $1,585 that they're carrying now. But this is at such a low rate, guys, that they're not getting any tax benefit from it. That's virtually guaranteed. So what does it look like when we have the negative $1,525 because they paid off their debt? It looks like a net payment of about $2,391. So on paper, total payments, they're paying $3,111, including their non-preferred debt. But net cost of ownership after they execute this strategy, their standard of living has gone down by $700 a month. So they actually get the home they want, they move up, they level up, and they improve their standard of living by $700 on a month, $641 on a month, or excuse me, $700 on a monthly basis. Now we could take this one step further and say, well, great. What if you just simply paid the difference back to the mortgage? How quickly would you be debt free? That answer is probably around 15 years. And so what we just showed them was their ability to buy the house they really wanted for the same dollars they spend right now at a higher mortgage rate with better tax advantage and be debt free probably 9 years faster than they're currently on track. That would be how you'd create a move up scenario.
Yeah. Now, why didn't you and the net worth show, actually go into the advice engine on this and let's change the view and show net worth in long term. So go to analysis and click that to net worth, switch the screen. Now go back to the TCA and not only everything Andy just said, but look at the increase in net worth as a result of doing this. What did you have the real estate appreciation rate at?
I think I probably had it at 4%. Let's take a look. 4%. Right?
So guys, this is a data-driven mortgage advisor. The best mortgage professionals in the world that are rocket proof. One, they're having their data monitored. So speed to need. And Andy and his company, they have all of our best data. Yes, they get credit alerts like Jeremy's, but they're getting alerts before that. Like, when does someone look like a move-up buyer? When does someone look like a debt consolidation? Guys, if you are not getting predictive alerts, Rocket knows more about your database than you do. Mr. Cooper knows more about your database than you do. The most sophisticated marketers in the business, they're anticipating the needs of the consumer. So speed to need, let's get to the consumer before they know the need, and then speed to clarity. Notice how he is, it's a fairly complex decision to be made. Like, Rocket can't take Andy's loans because he's got Trust Engine and our MortgageCoach Next Generation product. So he knows the needs of his consumers more than Rocket does. And he's able to get there preemptively. And then he's able to communicate and speed to clarity. Dude, this was one of my,
Thanks, Dave.
This is an all-time great interview. Folks, let Andy, if you can stop sharing your screen, brother.
Yeah. Yep.
All these links, if you're in YouTube, there'll be one link, maybe we'll call it like the Andy Zemon Rate Shopping Masterclass playbook.
Whatever you want to call it, man.
And everything that we talked about in here will be in that nice, neat place.
How about Andy meets Jeremy?
Andy meets Jeremy. We will also take some of this content, get it into the First Home IQ platform so that you can turn that into a coaching community. Whether you're an individual loan officer or you're a manager who helps loan officers, and you want to modernize them, you want to future-proof them, you want to rocket-proof them, make sure that you're active in that community, and we gave you a link. Bro, you rock.
Thank you, man. I appreciate you guys. If you got anything, reach out, connect with me on social, please. I need more friends. I'm desperate for more friends, so come be my friend, all right?
Yeah, and if you have not texted Todd Bookspan on his birthday yet, make sure we blow up his phone today with happy birthday wishes. Take care,
Hey, you're the
everybody.
man. Thank you.
All right, this is a wrap.